gas rights are a non-tangible asset and can sometimes be a little bit murky or confusing as far as how the whole process works, kind of what it looks and feels like if you were to put on, I guess, oil and gas rights. And I thought we would have someone on the call here today who actually has experience as an investor in gas and oil rights. So with that in mind, Johnny, I wanted to invite you to the call today because I thought you'd be a great context and content of this conversation of being you're an active investor, right? You've been involved in real estate for brick and mortar over 20 plus years. You've had positions as a lender, and obviously you have positions here in oil and gas. So tell us a little bit kind of about your experience, I guess, in the investment space, and then we'll get kind of more into, focusing on the gas and oil rights.
Sure. I've been a broker for 40 years now. This is my 40th year. So started investing 30 years ago, flipping houses, then buying and holding houses. And as you get older, I manage all my houses. And so I decided, well, let's start getting rid of some of these. How can I do that? And didn't want to pay the tax man, so decided to do 1031s over into oil and gas.
That's awesome. So I know you're newer in a sense of you've been investing in oil and gas for yourself personally for about 2 or 3 years, but you also shared that your mother actually owned some oil and gas rights as well.
Now, my family had big, large family had a couple of sections of land out in Midland, Texas. They sold the land, but kept the mineral rights. And so there's a lot of my relatives out here that get a little check every month from Pioneer, which is a pretty big oil company. So having that experience and seeing what my mom was getting in checks every month, I mean, she just light up. She didn't ever want hers direct deposited. She liked getting her check in the mail to see how much money that was going to be every month.
Love that. Well, and so you're in the Dallas, Greater Fort Worth area in Texas. So is that come with the territory as far as you living in Texas and being exposed to it?
Dallas Fort Worth's a long ways from West Texas, but it's an oil and gas town. I mean, we've got some big families with big oil and gas companies, Moncriefs, the Bass Brothers, very wealthy families that have been in oil and gas. And one of the reasons they become so wealthy is that those oil wells just keep paying.
They didn't run out like they thought they might.
Yeah.
Well, that's a good place to be if you're invested in it for sure. That's what we're kind of more curious about too, of what that ownership looks like. So as far as your ownership goes, did you invest directly into oil and gas, or were these exchange replacement?
So I had one property that one of my tenants wanted to buy. And so I did a 1031 exchange and put that proceeds of that house, which was paid off. I put that into my first oil and gas deal.
Okay. And why did you put it into oil and gas versus just putting it into a larger brick and mortar multifamily or something of that nature?
Yeah, it was kind of interesting. One of my relatives, she left her mineral interest to someone, a company, anyway, a charity type deal. And I was trying to buy those minerals. They wouldn't sell them to me, after she gave them to them. So when I got a call from the company that was doing oil and gas, and so I started exploring that. I said, I'd like to turn this into mailbox money instead of, buying another property, which prices were so high anyway. It was hard to find something. So they piqued my interest. We sat down and had some phone calls and some Zoom calls and pulled the trigger on the first one.
And obviously pulling the trigger on the first one allowed you to feel more probably comfortable and confident as far as what it looks like, and that.
Yeah, and honestly, I was skeptical. It's I hear all these things about oil and gas deals, and so I was a little skeptical. But their projections and they did. I did a little research on the operator, who is based out of Fort Worth, which is real close to where I'm at, and so I didn't feel too uncomfortable doing it, and figured I was renting this house for $1,700 a month, and that particular deal generated last year I think it was a little over 70, about 72,000, something like that. So
Okay, so you took your position that would have generated about, call it 20,000 for the year, exchange it into the gas and oil, and now you're at your 70,000.
yeah, except the 20,000, you had to subtract property taxes, insurance, and any other
Okay, that was
repairs.
gross.
Yeah, that was gross.
Okay. Yeah, okay, that makes sense. Now I see why you might be interested in changing that position.
Yeah. I'm not ready to just get everything into there, but boy, I mean, it's sure nice just not having to get those calls on the property and the money just shows up. So, there's,
Yeah, I think that's a good point though, Johnny, is that the purpose of this is really to get people informed and educated about it. Not that it's the expectation someone goes all in on it and this is their position, but more so it's something to be mindful of. It's an option for you. I know a lot of people have talked about how you can use extra excess funds from the exchange that you weren't able to place. This could be another opportunity for you to place funds within a gas and oil rights position.
sure.
So that could be a way in which you use it, or maybe just a small position. But either way, it's just understanding things that you can invest in and how they operate and work and what you can expect from them.
Correct.
It sounds like, Johnny, you've been expecting double-digit returns because that's what you've been trained by your monthly recurring statements that's what to expect.
Exactly. And as I mentioned, I've got one that it's not hitting my expectations, but they're still going to drill 2 more wells on that. They've got 3 of the 5 drilled. Those numbers will come up. It's probably more in the 8% range. But so there is some speculation to it. There's no guarantees on what kind of production you're going to get out of a well, but that's still a better return than what I was getting on the rental property.
Well, so with that in mind, if you personally, your opinion, who would you say is typically might be better suited for this type of investment versus not suited for it?
I would see somebody that still has other investments that, other properties, they're not dumping everything into it, or it's not their, only money they've got to work with. Not that it's real high risk, but certainly it's not, there's no guarantees. There's the technology today almost guarantees oil wells to produce something, but we don't know what they're going to produce. So I would say it's somebody that's financially, they're not putting their last dollar in this deal, but they want higher returns than what they're getting on their rental properties. And they could gradually work their way into this.
Right. So this is kind of like a mutual fund effect where we already have some brick and mortar. Maybe we have some loans out there. And maybe we have some actual REIT or mutual fund type setup in the stock market. But this would be another position where you can help place to layer that portfolio a little bit more.
Sure. You're just kind of diversifying a little bit.
Yeah, that makes sense. Okay. Well, as far as your positions go, I know you were very graceful to share your statements and everything that you had been receiving and collecting on these. I know if we look at the Coterra revenue, is that the one that was from 2022 or?
No, Coterra, I just started getting paid in March of this year, and they had actually some, when they sold it to the person I bought it from, there was some money sitting back in reserves, and they passed that on to me also. So really, I've gotten about I think it's $35,000 since March on that particular deal. I don't expect that to keep coming, but I expect it to be somewhere in the range of $4,000 to $5,000 a month. And as they will be adding additional wells onto that. And that's based on.
We're looking at this document here, right? It looks like one big giant cluster of numbers and Excel columns and rows, and it's making me nervous.
Yeah, so the bold lines kind of dictate which well, and the ones on the left say what they're paying. Is it coming from natural gas? Okay, so if we just go
from the top here, right? The Cimarex condensate drip, March 24th, March. So if we just took one of these columns here, could you maybe just explain what this is?
Yeah, the condensate drip, they sell everything they can pull off of there. But like the top of the line there that says the Sievers, that's the name of the well. Okay. that Severs, let's see if I can tell, 5H. So there's 9 wells in this package. But the big number that you want to look at, you scroll down and it'll just say oil. So the check total on this one was $3,994. Year to date is $24,591. So
Okay, and that's so that's $24,591, and that's net of all expenses.
that is correct. Mm-hmm.
Perfect. And so that's based on how much money did you invest?
Well, it's going to seem astronomical, but that was $210,000. So
okay, so hold on. I have my calculator out because we're doing this live, right? We didn't practice this.
Right.
So 24,591, and we'll keep the change out, divided by, you said 210?
Right.
210. Okay, so you're already at 12% year to date. So
12% of your investment coming back, that's and that's 3 months worth of pay, And again, as I mentioned, there was about 15 grand of money that they kind of had held back in reserves on the not the March but the April check. But
so it's safe to say if we're already at just shy of 12%, I mean, what's your expectation of what you think the end of the year will look like for the actual?
So I think you're going to be looking really, because I'll take that 15 and cut that back to 5. I think you're going to be looking at 25 to 30% on this particular deal. This one's paying better than my expectations.
Okay, well then that's good. That's a good segue to, based on your expectations relative to your actual, right? Like, what's the lowest performing position you have in oil and gas rights?
Yeah, so right now, I would say the one I have is at 8%. They still need to drill those 2 wells. It's just not doing as well.
So 8%, right?
Mm-hmm.
Still outperforming much of real estate at this moment.
Right. Mm-hmm.
However, what's the biggest, what's your biggest fear, Johnny, of your positions long term?
Yeah. So I guess I don't have a big fear. I think that one, I'll make it up on like this other one. I'll balance it out. But someone that just bought one and got this 8%, if they're real skittish about a deal, then also this didn't work out well for me, because the other one that I've got, the first one I bought, is about 20%.
Right.
And I did buy that first one. Oil prices were just over $100 a barrel. I think that was in 2022.
Right. That's when we were at all-time highs, right, for the price.
Right. And so now they're, in the high 70s, something like that. But that's the other thing that people need to understand is it is a commodity. Prices will go up and down. They'll be excited when it goes up, and they'll be, disappointed when it goes down. But ultimately, I don't see it going away at all.
Right. So I guess really, what I wanted to accomplish on here is just let the audience and listeners, hear from someone who's in the position, maybe understand what things they should be thinking about, considerations when they're looking or thinking about the idea of oil and gas rights. And I think it's from our conversation, it's just get educated, explore your options, and be mindful of them. And if you're looking to generate passive income, there's a lot of options available to you, but most of them are typically going to be actively managed on your behalf, right? There's going to have a lot of operating expenses, and you're going to see a lower return. So this might be something where, if your goal is you want to be trying to look for higher return figures for a passive vehicle, and you have a portfolio of assets, right? This would be a good opportunity, right, to include in your portfolio as another position.
Correct. And I also think that you'll see, you're experiencing out there, the returns are going down on some of the rentals because of the cost of insurance, taxes. That stuff was just, over the last year or two has really gone up. Mm-hmm.
It's funny you say that, because Johnny, I was just thinking about how much we've seen insurance change over the past couple years, and how people that may have bought something, right, that's got very thin margins, it could be the difference of them, right, making positive cash flow versus not making anything.
Oh, exactly. I mean, we've seen probably 30% increases on annual premiums. Some of them
So-
more than that. Mhm.
Is there anything else though that you wanted to share about your experience or about investing in oil and gas, or anything else you think the listeners should know about?
No, I just think, to me, it's a little exciting. I'm kind of like, I told you my mom always liked looking at her check. I mean, to me, it throws a little excitement in there. You don't know what your check's going to be each month. But it's all been good for me.
Yeah.
I mean, I'm making more than I'm making on the others. I don't think it's going to run out, like the oil's going to run out, because the way they do this, there's multiple layers that they can drill on. And these operators have these companies that they'll come in and they'll, if those stop producing quite as much, they'll drill on another layer. So, it's not going to be a short-term play for sure. So,
Well, that's good to hear, right? I think that's probably something a lot of people think about is the biggest fear if they were to put one together would be, well, what if it runs out? Then I get nothing.
right.
And at the same time, if you got 100,000 more than you put in, would you still be okay?
Yeah. And, it's not like real estate in the sense that if you wanted to sell it, that's a little more difficult. So you need to understand that, you're going to get the letters in the mail from people wanting to buy your mineral interests once you buy this stuff. I get them almost immediately after I buy them, but it's less than what you paid for them typically, because they're out there trying to find somebody that wants to get rid of their mineral interest.
Right. I think Mike said it well, that you're buying a cash flow.
Right. Exactly.
Well, Johnny, thanks for your time. And I also, I wanted to mention too, Johnny has helped out several of my clients on the brick and mortar front too, right? So with 1031 exchanges. So thank you for your help. And for anyone listening, if you guys do have any real estate investment needs in the Dallas-Fort Worth area, Johnny will be happy to be of value and resource to you, and we'll be sure to share all this information too. So thanks, Johnny.
Yeah,
appreciate
thank you.
All right, I'll see you out in Texas.
Sounds good. Come our way.
See y'all soon.